Pollard Banknote Limited, PBL on the TSX, currently trading at a price of just over $30, has a $812 million market cap and a dividend yield of 0.5%. So Pollard serves the lottery, instant ticket, and charitable gaming markets, primarily in North America. And it is one of the largest printers of instant tickets in North America, with approximately 85% market share in Canada and 22% in the US. And the company also serves the US lottery market through its joint venture, Neo Pollard, of which it owns 50%. And in the last quarter, for Q3 of 2023, the product breakdown was about 76% lottery, about 14% charitable gaming, and about 10% e-gaming. Now, looking at the last quarter, again, Q3 of 2023, which was reported last week, I believe on November 7th, revenue was up 2.5% year over year to $128.7 million. And this growth was primarily due to an increase in charitable games, e-gaming, and higher average selling price of tickets, but was offset by a decline in lower instant ticket sales volumes, as the company noted that they're focusing its sales mix to avoid lower margin work. Now, adjusted EBITDA was up 21% to $24.8 million, and net income was up to $7.7 million, or about 29 cents per share, compared to a loss for Q3 of last year. And the primary increase for both adjusted EBITDA and net income was an increase in equity income from its 50% joint venture of iLottery, which it grew its revenues from increased sales of Mega Millions and Powerball Jackpot. Looking at the balance sheet, it does remain healthy with no current cash balance right now, but a trailing net debt to EBITDA multiple of about 1.6 times. And just a note, the restricted cash is related to amounts held on behalf of iLottery customers. Looking at the valuation, right now the business trades with a trailing price to earnings multiple of about 26 times and an enterprise value to EBITDA multiple of about 11 times. And just for reference, that PE multiple remains slightly below its 10-year average of about 30 times earnings. So keep that in mind. Now, just looking here to conclude, I certainly think that Pollard Banknote is a good business, which has produced tremendous long-term growth with a revenue compound annual growth rate of 11% from 2013 to 2022. The stock trades with fair valuations given its dominant market share and track record, has a healthy balance sheet, and pays a slight dividend, which it has grown over the years. However, as management voiced in Q3, there was weakness in ticket sales volume, which was only offset by pricing increases, which essentially is not a sustainable source of growth over the long term. Now, looking forward to 2024, management noted that the repricing of instant ticket contracts will continue, which could potentially impact demand and hurt volume further as we see consumers tighten their wallets with increased interest rates. Now, overall, I think that the business will likely perform well over the long term, but seeing the potential near-term weakness in volume and potential difficult comparables to this year, I think the business trades, closer to fair value, at least in the near term.